All right, guys, welcome to another YouTube video. Welcome to my screenshots page. Sorry for that sneeze. That was terrible. Um, so today is a Tuesday. It's 8:57 currently. Uh, boy, I don't know why I'm sneezing so much. Do do do. Um, and we are gonna get into trading. Now, this video is not gonna be as long. I'm gonna make multiple videos. Um, but we're actually going to dive into a couple of things. I'm not going to get into stock files today. That's something else I'm working on. But so since the last time that we talked, we've got a lot more research um, that we've been taking a look at. Let me open up my book map. Sorry, y'all. Just so I can get this data aggregated. Alright, put maps on my other screen. I'm going to bring it here to show you what it looks like, guys. Alright, so just for a second. So this is going to be an educational video up until I start trading, and then I'll make a trading, and then I'll stop this recording and record a trading video just so that it's shorter. How far do I want to go back? Alright, so when the stock market looks like this. This is a visualization of what the actual stock market looks like. And it looks like it's a little confusing. Like there might be a lot going on here. And that's because there is. Let me just check something right quick. Nothing's going on right. Alright, so for this, we've kind of got a speed run how the stock market works, and then we'll speed run pretty much all my indicators and this, that, and the other. I think that if we go over here, I can kind of explain all this pretty fast. All right, let's see how fast I can do this today, guys. Where we at? We're opening inside parity values. We'll see what LVNs we have. I'll take that over. All right. So right now, this is what our chart looks like, right? And people say, hey, this is the stock market. This is what the stock market looks like. You can see that we're in an uptrend and all this kind of stuff. We had a little bit of a pullback. But this isn't really like telling us, this just tells us a picture perfect view on the 5-minute chart of like what's happening inside of what the stock market looks like, right? And so there's a difference between what it looks like and what's actually going on. You can have an uptrend that's actually a whole bunch of sellers getting ready to drop this price off like it's hot. So all of this, you see all these green bubbles, all of this is buying. We've had buying since 5 o'clock. And you see these lines that we're looking at here, all of these are like strong orders. And what I mean by strong orders is that like in the stock market, you don't just not everybody presses a button and sells or buys, right? At the price that the stock is at. They have these what we call limit orders, right? Or stop orders, or these resting orders that are at important points of price. Because you have $1 billion, $1 million, $1 trillion institutions that are trading these things, they need certain prices to get quote unquote filled, or they want to have certain prices for their positions. And so they don't just press buy with $1 billion in the market because the market's going to shoot up. They need their orders to be loaded up very slowly. They need their orders to be loaded up very discreetly, so that not everybody's like, oh my God, there was $1 billion just pumped into the market. It's going to go up. Because that defeats the whole purpose of them being better than you at trading. And so these orders, like, you've got 27 orders in here. You've got 28, 37 orders. And, like, all of these orders take, like, $20,000 of margin. So you can just imagine, like, you got 37 large orders, not to mention what's really going on to make it even more complicated is that there's all this liquidity around. So all these small orders, you have like $1 billion surrounding the market at all times to provide liquidity, right? So you have all of these orders that provide what we call liquidity, but we really pay attention when we have these larger orders, right? These larger orders tell us, hey, there's a significant amount of orders there, and these are where important things can happen when you line them up with the things that you see on your chart, right? And so you're looking not just at, oh, for a certain amount of time price has been going up, but you're looking at each individual price, whether buyers or sellers were in control. And if we're in an uptrend and sellers were in control, but we continue to move up, that means that sellers are weak. You have this indicator right here that's called, which I have as the Russell CVD, but it's just your cumulative volume delta profile. What that means is, geez, this is actually a lot to explain. What that means is the number of buyers minus the number of sellers, or the number of sellers minus the number of buyers, depending on who's in control, right? So we see all this green right here. This means that buyers are in control, and this tells me by how much, right? And in an uptrend, in a very strong uptrend, an uptrend that's going to continue, I want to see that buyers are being consistently in control, and that even more buyers are entering the market, meaning that there's more bidding, that the market is actually moving further and higher, and we're finding more buyers at higher prices. But if you start to level off, if you start to drift off, and then we're at a resistance level and it's a balanced day, right? Because those are the days where we're going to see the most beautiful fading and the most bouncing rotation. We went over that in the last in the last video. Then I'm like, okay, we're not getting any new buyers for real. Price is kind of going higher. It's going higher at a slower rate. I'm seeing some resistance. I'm seeing sellers enter the market and no buyers re-entering the market. And we're moving past the amount of buyers that we had before, and we're at higher prices. Lower prices are inevitable, right? And so, like, when I was trading in the previous video, that's why this is so important to me, because I could look at a chart and be like, oh, like my indicator hasn't been touched yet, and price is moving up. And if I waited for my indicator, we wouldn't have had the money that we had on Friday. And I could look at this and be like, okay, this is what I'm seeing start to develop. And then I look in depth and see, hey, there's a change in transition. I'm going to go ahead and enter in on that. And that's how I can reduce my risk so low. That's why I was able to, like, accurately be like, okay, I'm going to bring my risk up here, because I'm looking at the book map and I'm saying, all right, buyers are bidding at higher prices. I'm seeing them enter more. Sellers are coming in, but buyers are still re-entering and pushing price higher. Yeah, I'm rocking with this. So this is the book map. Again, these lines are just resting orders and their liquidity. You don't even really have to pay attention to them. You really have to pay attention to the whole chart. I have a volume profile right here, which is what I showed you before. On book map, sometimes it's easier to see what the volume distribution is when we have low volume nodes like this right here. Low volume node developing right over here. Low volume node developing right over here. Sometimes it's just easier to do that. Well, that's, but so this is the book map. So if you see me talk about that, I'm just looking at the in-depth market data. This is like level, it's like level 3 or something like that. I don't know. All right, now we're back to our chart. So this is what everything looks like, and you see, like, you can't see that. Well, you could. if you looked at, what time frame is this? No, this is me. Intriguing. Uh, Let me just keep it how it was. All right. Okay. So now we're gonna go ahead and dive in on analyzing the market. Let me pause this for y'all. All right. So here we are. All right. All right. All right. Let's drop down to the 15-minute time frame. All right, guys. We're gonna have a great day in the market. If I could zoom in. And again, a great day is not defined by making money. A great day is defined by the discipline. All right. Okay, I'm not going to use this because this is pissed me off. All right, so let's go ahead, get rid of all this stuff from last week. Let me get rid of all of these lines because I don't know where those came from. Okay, just making sure I was recording. All right, let's do this. I'm going to briefly in speed run explain all of this that I'm currently looking at. So the market is not at all-time highs, but dang near there, okay? Well, this is important for the analysis. We have news coming up later in the week. I did not trade Monday because Monday is historically when it's a no news Monday. Yes, you can get good movements, but even looking at the book map, everything is just kind of slow. So this is this. This is last year around this time. Well, we're getting there. Have we ever looked at the 1 day chart? Yes. I don't know why I have these marked as anything. I don't know where this came from. All right. So you see, we're pretty high up. Every time we get to around this point, barbecue chicken. So, what I'm expecting is that we're going to keep building value. We came down yesterday, and we've been developing value for the past couple of days. I expect that we come over here and we get some nice rejections off of that, right? And that's probably going to happen later in this week. Only because this is on the 1 day chart. It's happened 3 times. And then from there, we get a nice little downtrend. And because this always happens around Q4 and things like that. So we'll probably get a stab. Maybe even another pullback. Who knows? But that's currently where we're at. So that's just in the back of my mind. Right? In the back of my mind. That guy's crazy. Anyways. So we're going to come onto my chart. Major pause. Going to go 2 contracts today. don't really know what's going to happen today. First, let's mark a couple things. Let's mark out this, and I'll explain what this is. Don't worry. All right. So before we go any further, let me explain this. This is a volume profile. All right. A volume profile is basically a way to look at what exactly did we decide to do yesterday in the market, and what points of price are important for today that became important and relevant yesterday. And you see this when you see this red line, which is the point of control. This is where price is traded at the most. So most of the orders were accumulated here, meaning that most of your stops are probably going to be right over here. Or most of the orders that are going to defend price are going to be right over here. Now, I'm not going to like mark this out because I don't really use it in that way, but I also know that that's relevant information for me, right? Depending on what kind of day we determine that it is. And so I usually mark this out as previous point of control or previous POC. It's a very important place in price, obviously because that's where the most volume was transacted, all right? So previous POC. Next, the next thing that we're going to mark out is what we call value area high and value area low. Value area high, value area low, lol. What the lines that I'm marking out are important because this blue shading is where 70% of the market transacted its volume. So I want to know the place where the market is going to have the most balance, right? Remember we talked about being in balance and being out of balance, right? So like if you look at this prior day, the day that we had our good trade, well, our first trade, and it was still a good trade even if it didn't make money, right? You'll see that we came out of value and we did not build. You'll see that this is the value area, right? And market opened inside of value. Market opened up a little bit outside of it, came back inside of value, rejected off of this major LVN, and this major valley inside the price distribution, this zone a bit, and the dang near the previous point of control, and at around 10 o'clock, you start to get this reversal upwards. And so, like, that day, once we come back in balance, I'm going to expect that we bounce around rotationally. What do we do? Shot down, bounce. Shot up, bounce. Even though you get a little bit of a chop, you get another reversal downward. So we did not trend in one direction. We bounced around, which is expected when you come value. Value has not been able to build above here. Now, knowing this, we are opening back up inside of value in the market. So that's why we're also going to wait the first 30 minutes to really figure out, okay, during the first 30 minutes, do we break out or do we stay inside value? And then if that's the case, then we're just going to look for our levels and we will trade that. So let me just go ahead and mark out the value area high. That's why it's important because it tells you whether the market is balanced or imbalanced. Because 70% of the transaction were there. If we're leaving all that value behind, and that means that we're trying to make value somewhere else, meaning that I want to follow the trend. I don't want to just assume that it's going to fade back into balance. That's idiotic. It would go against your probability. And you'll be amazed how often I've done it and how often people do it and don't even realize what's happening inside of the market. Anyways. So we do this. All right. This, what I'm looking at right here, is an LVN from yesterday, okay? You have a peak right here, you have a peak right here, you have a little bit of a valley right here. I don't know how valid this is going to be, how well this will hold. And it's very possible that we have this push up and we might get another pullback in the market, which is possible. I won't knock it. Because value could be migrating lower. POC was here, POC was up, and today's POC might get determined a little bit lower. Who knows? I'm not going to assume anything. I'm just going to wait to see what happens. So I'm going to mark out this as a no tap LVN because that's been tapped in a New York session, which is the most volatile session, which would invalidate most of the orders that are probably resting or the reactions that are going to happen here. So we've marked out those three quote unquote indicators, right? I'm going to call those indicators because they're structures in price that tell me, hey, like this is probably what's going to happen, this, that. I don't call my book map an indicator because it just actually shows me price. It does not indicate anything to me. It tells me what's actually going on behind the scenes. All right, let's go mark some levels. Got a level right here. I'm just looking at swing highs and swing lows. A level right here. That aligns with this right here. We've rejected this area twice now. So if we're going to build value higher, for real, and shoot all the way up to those all-time highs, dang near, and come all the way up to here, we've got to clear this. All right. So there we go. So you have these levels. Do I have a levels? Yes, I do. I call them consolidation zones because it's very obvious that there are orders up there. You're accumulating orders up here, accumulating orders up here. Let's have that another. All right. And we make them zones because, unlike the stock market, price does not react like down to a pinpoint in the futures market. Like, orders get shifted around. It's a whole spill. Even it gives me a headache sometimes too. Now, we've marked out the places where if we have a balance day, we're probably going to bounce off of these things. Even this LVN is a bounce zone. And I've marked out the price structures that if we're coming out of balance, we'd have to run through. And so I'm not just looking at the volume profile, I'm looking at the structure that backs up my thesis that gives me the highest probability, because my strategy is not difficult. What's difficult is gauging what am I going to do in the market, right? And how is it actually going to be quality? When am I going to enter? What's going to justify what I'm doing? Is there news? XYZ. So we have all this marked out. Next, and I believe my last two things, is to mark the overnight low and my overnight high, which is currently being developed right now. All right. So, why is this important? Overnight, you have a good amount of orders being made from Asia session, right? So the Asian banks and the Europe banks, they're trading and they're a lot more active. They do get active during New York session, but you have a lot of orders, and if your overnight areas are backed by price, right? by price structure. You see how this is backed by the overnight high is backed by LVN. Overnight low is backed by a consolidation zone that we marked out, right? Previous consolidation zone over here. Previous consolidation zone over here. A POC, previous POC, right over here. These are extremely important because if it's a fade day, then I know, this is a very strong area. Not only do we have a lot of liquidity over here because it's overnight low, but this is a consolidation zone. This is a good place for price to be defended if it's a bouncing kind of day, right? If it's a running kind of day, then we should be slicing through this, and then it would be very obvious, even if it's a strong structure and we ran through this, it's time to press the button in whatever direction, and we could damn near just let it run. You feel what I'm saying? Not really, but yes. So all this is in place. This is why it's important for me, because I know the important areas, and then when I see my indicators start to set up on my 5-minute chart and things like that, I start to pay attention to my book map and see the in-depth narrative and the mathematical advantage that whatever side has based off of what I'm looking at. So that's the way that I look at the market. That's the way that I analyze it. Those are the indicators I use. These indicators right here that you're looking at right here, they're moving averages. I use the DMA 9 as a dang near entry signal. This blue line is a 30 EMA close, and I really just use that as like an intraday kind of trend gauger. So like once we cross, I knew that we were in a good uptrend. You even had to pull back to it, and the momentum starts to continue again. So like I just use it to kind of gauge what's happening in the market. I'm not really using it as an entry signal. So like if I'm above it, if we're above, then I'm gonna, and like we're coming off of a good price structure, maybe it's a continuation day, then I'm gonna be like, yeah, you know what, like longs look really good for me, right? This is a good continuation play straight off of LVN right here, and it shot up. I don't even have to drop the volume profile to know, like there's just so much buying and the market's spending so much little time over there. So yes, these two moving averages, this one's a little bit slower, this is a little bit faster. They just help me gauge like if price is above it, then we're bullish. If price is starting to move towards it and we break past it, then we might start getting bearish. It's not a guarantee because in futures, moving averages are not as effective. They just help me gauge things. And so when I come out to my higher time frames, like the 1 hour, if it'll pull up straight off of that overnight high and rejecting this overnight low. Jeez. And the market's about to open. I don't know why we're not. Lock in, guys. All right, there we go. So look, price yesterday, price we were above, and now we're kind of getting, we're going to get probably a bit choppy, going to get a little bit of bounce because we have a lot of news coming out this week, right? So this might be another bounce day, right? If we're opening up in value. And it might be a little bit of a higher bounce day. Price is above, and so we're generally bullish, right? So the best direction that's going to give you probably the cleanest setup, right, is longs still, but it's getting a little bit choppy, right? So then I go down to the 15-minute. We're still above, right, but around here, like it's getting very choppy. Like there's no clear direction. You know what I'm saying? We were down, then we came up, and at that point, I'm like, okay, yeah, we might be getting a little bit choppier. Not choppy in terms of price action, but just in terms of bouncing around and not trending in one clean direction unless we gain some new momentum. And this might be the momentum gain that we're looking for. This might be the momentum gain that we're looking for. But for me to safely say that, we'd have to clear all of this liquidity right here, in my personal opinion, because we're opening up in balance, right? We're opening up in this value area. So it's easier for the market to actually like go low, and then take continuations, and then you maybe see a bounce back up to the upside. Who knows? So that's that. That's why I use what I use. That's my indicators explain why they work. Here are the settings for the moving averages. These are exponential moving averages. This is a double exponential moving average. And so that's that indicator video.